and welcome. You're watching Market Fatafat on ET Now. It's me, Snehisha, and with me is Cheryl D'Souza. This is a show where we're going to take you through all the top buzzers in today's trading session. We're going to tell you why they're buzzing in under a minute on the fundamental side, as well as we're going to have technical experts join in on the show as well. Cheryl, tempered moves coming in on the markets. We did see an opening above 24,000, but we're doing that flat line right now.
Absolutely. I think we're taking it easy. Weekend is here, isn't it, Snehi? So that's the way how the markets are actually taking it a bit easy, given the fact that they've had a spectacular ride for the rest of the week. We have now comfortably scaled past that 24,000 mark. In fact, on an intraday basis, we did scale past 24,100 as well on the Nifty, while for the Sensex, we have actually scaled past the 79,000 mark. You have Nifty Bank that had touched the 53,000 mark. Now we are around 52,500 odd levels. So yes, markets are taking a bit easy given the fact that we are in the last day of trading session. In fact, this is the last trading day of the month, the quarter, as well as the first half of the year. So that's the way how the markets are looking like at this point in time, holding a bit flat with the advanced decline ratio slightly tilted in the favor of the gain. There's a lot of stocks to talk about, isn't it, Srishti? We have 1 hour.
Absolutely, Cheryl. Lots to talk about. But before we talk about all the stocks that are buzzing in today's trading session, let's connect with the management of Emcure Pharma. We have Satish Mehta, Managing Director and CEO and of Emcure Pharmaceuticals joining us. Let's get to understand a little bit more about the company. Thank you for joining us. Tell us a little bit more about the company's operations, what the company is into, as well as the rationale behind this IPO and where will the funds be deployed.
So as far as Emcure is concerned, let me tell you next, couple of minutes. I come from Pune city. I did my MSc in organic chemistry from Pune Vidyapeeth. After that, I landed in IIM Ahmedabad, and 75 I finished my MBA, and I was the only person from my batch, who did not offer any placement because I wanted to do something on my own. And that's how in early 80s, I started Emcure, small company to begin with. But as far as the real marketing is concerned, I started doing in the mid 90s, I'm 95, 96, and I started my own marketing stuff. And that's how, this marketing portfolio has been built up in last 28 years. That's what we have done. And we have built up a company which is, driven by research, R&D, technology and innovation. There are three things which are very close to my heart. So research, technology, innovation has played a very important role in building this company. And as I look back at my journey of last 40 years, my company has given maximum number of new products to the industry. Whether you are talking about chirality, iron, or even for that matter products which are biotech, biotherapeutics. So that's what we have done. And as I'm speaking to you, as per the reported numbers, we are ranked 13 by AVAX. That's what we have achieved. And as far as the company is concerned, today, 48% of the revenue comes from the domestic market, and 52% comes from international market. And when I talk about international market, there are three subsets. One is emerging market, second is Canada, and third is Europe. So that's where we stand today. I'm talking to you.
Good afternoon, Mr. Mehta, as well as Ms. Thapar Shell also joining in the conversation. And after debt repayment, if you could tell us how much will be the debt on the book that will remain, and also after repayment, how much of the interest costs will you end up be saving with that?
So basically, as far as the debt is concerned, as per the published results of 31st of March 2024, we had a debt of 1,500 plus. And out of these proceeds, say 800 CR, that we are going to raise by the way of primary, 600 crores, will go for discharging the debt. So as far as debt is concerned, post listing will be south of 1,000 as we go forward.
All right, and looking at the breakdown of revenues into different segments as a percentage of your total revenue, there is a change in mix with generic contribution increasing from 31% in FY22 to 40% in FY24. So how do you see this number moving going ahead, and the contribution from other segments changing as well?
It's a good question, but how you define generic, I don't know. Because if you're clubbing the entire business, emerging, Europe and what I'm saying, Canada, in that case, what numbers you are saying, I don't know, maybe probably true. But at the same time, talking about the domestic market, We are essentially in brand building, and we are building brands, as far as the domestic market is concerned. So here the component of generic is not much. Essentially, it's a brand-driven company, which is selling, differentiated brands. So the number that you are saying is probably, consisting of whatever we are selling in the global market that you are probably taking as generic, I believe.
And in the domestic market, our USP always remains the science, the innovation, the technology, and that by very fact, the focus remains on making our big brands bigger. And so branded generics will always be something that we will double down on.
Yes, that's about the brands and where you all are involved in. What about royalty as a percentage? Do you think that that is coming down? Any a trend that one can focus on or look at?
What really happens, you lead a dynamic company, and suppose, if new proposal comes, that has some, what I would say, element of royalty, that will come. But as of today, no. As of today, the deals that we have, there is no royalty element involved.
Royalty sometimes comes in the in-licensing portfolio, but more and more, as is evident from the Sanofi deal, we're shifting to a different distribution model that is definitely, a win-win for both parties.
All right, but also when I take a look at your financials, your margins seem to be declining over the years. Is there anything in particular that is ailing your margins? Could you help us understand why this has been happening?
So basically, there are three areas, which will help us to improve the margins. And I think, we are in investment mode. One thing, that is required to be understood, that we added 1,000 medical representatives. So over a period of time, the productivity should increase. So that will obviously help increase the margins. The second thing, that as far as we are concerned, we need to do better in three therapeutic segments, as in diabetes, dermatology, and CNS. We are in investment mode. So once they mature, the margins will improve in those three segments where we are today in investment mode. And third important factor, which I would like to mention, in last 18 to 24 months, we have created 4 new manufacturing facilities. As far as these 4 manufacturing facilities, we are in the process of ramping up the capacities or increasing the production in those areas. And once we reach this optimum level, that will also reduce the drag that we have in the overall profitability. So we are having clear-cut strategy and plan for improving the margins. It's all about execution of whatever we are doing.
Most important question, I believe, would be
doing in the past, but I believe based on whatever we have done in terms of quality of board that we have, the corporate governance that we have, the transition should be smoother. So obviously what really happens, I think, access to the funds, access to better talent, visibility, these are some of the things, which will help us. But at the same time, I believe the transition will be smoother than what expected, because we have done quite a few good things in the past. But at the same time, in terms of attracting talent, in terms of having growth capital, in terms of visibility to the public and large, these things should work out for us. And it's a very exciting phase, and we are absolutely looking forward to this new phase in our life.
And I might add that our culture has always been one of just putting our head down and doing the best work that we can. So that doesn't change anyway, whether we are public or not.
All right, thank you so much, Mr. Satish Mehta, as well as Namita, to take the time out and speak to us today on ET Now. We let you go on that note. That was the management of Emcure on the way of its potential IPO. But let's also talk about the big story of the day, and that's India's inclusion in JP Morgan's GBI-EM index. That is set to shake up the global bond markets. Now, analysts estimate inflows of about $30 billion over the next 10 months. But what does this mean for India, and will other global bond indices follow suit? Anurag Joshi is joining us with an explainer on what this inclusion in the JP Morgan index could mean for India and the Indian debt market.
US lender JP Morgan has kick-started the process of adding Indian government bonds to its GBI EM indexes. Now, this move has very far-reaching implications, not just for India's bond market, which will gain through more liquidity, more foreign investment coming in, because global fund managers will need to earmark money to put into Indian bonds, and especially those money managers that are looking to put money into bonds and are pegged to the JP Morgan index. Now, the inflows because of this move by JP Morgan are estimated as much as $30 billion. JP Morgan itself is forecasting that $20 to $25 billion will pour into Indian bonds due to its addition of the securities in its GBI EM index. Now, what is the proposition for foreign investors from Indian bonds? Now, if JP Morgan says that in the last 15 years, 11 years, the Indian bonds have delivered a positive return. And if you look at the Indian bonds performance since 2010, they've delivered a return of 3.8%, and they've outperformed the JP Morgan EM index. Now, this move will involve that 28 FAD, which is the securities that enjoy relaxation from capital controls according to RBI norms. They will be added to the list today, and every month there will be a staggered increase in the weightage. So it starts at 1% immediately, and it goes to 10% of the JP Morgan GBI EM index by March 2025.
So much for that, Anurag. Definitely a big feat coming in for India, at least on that particular front. But on that note, we'll actually slip into a break on this edition of Market Fatafat. And when we come back, we will start taking through the stocks that are moving in trade. So don't go anywhere. Welcome back. You're watching Market Fatafat with me, Cheryl D'Souza. Along with me today, I have Snehi Shah, and let's take you through all the stocks that are buzzing in trade. And joining us on the show are a team of researchers and the technical analysts. On the research front, we have Gaurav as well as Jinay, who's joining us. While on the technical front, we have Aamar Singh, who's joining us on the show. A very good afternoon to all three of you gentlemen, as well as to you, Snehi. And let's kickstart with the stocks that are buzzing in trade. And IGL, Amar, how is this one looking on the charts to you? We've seen a spectacular gain come in for MGL as well in today's trading session. But IGL in particular, what are the charts indicating?
So, talking about IGL, what we see is that the stock was in for consolidation. Earlier, it was unable to breach the 490 levels. But today, we've seen the stock breach that level, and that also on significant volumes. And what we see here on the charts, both from a medium-term perspective as well as a long-term perspective, we're seeing that it's now breaking multi-month highs. And if I look at the long-term chart, somewhere on the other, it has a resistance coming around the 520 zone. So that's a level where the stock would meet with some resistance. If that is taken out, then the stock is definitely poised to trade higher, and it could witness a gains of anywhere between 8 to 10%. So this is a stock one can definitely keep a close watch on.
All right, Amar, thanks so much for taking us through that. I'm going to flag off the move in Dishman Carbogen that we've seen today. Very stellar moves coming in on this stock at least, because last I checked the stock was higher by 8%. Did very well on opening also today, because the company's wholly owned subsidiary, which is Carbogen Amsys AG's manufacturing site located in Newland and Aarau, 2 units in Switzerland, have successfully completed the US Food and Drug Administration, which is the US FDA inspections. The inspections at both of these sites were concluded with no Form 483 and classified as no action indicated. So, 0 Form 483 observations coming in. Also, no action has been indicated for both these plants. Positive news flow coming in for Dishman Carbogen for 2 of its manufacturing units in Switzerland. On the back of that, stock is still holding on to those gains, almost 8% higher as we speak.
All right, Gaurav, coming to you then. We've all been waiting that the telecom tariffs will be hiked, and finally it's played out, and Jio was the one who took the first move, isn't it?
Well, yes. as you rightly said, telecom tariff hike has happened now, and Reliance Jio was the first mover to take this hike. If we talk about Reliance Jio, they have taken hike in somewhere in the range of 12.5 to 25%, and what they believe is that the net ARPU increase would be somewhere in the range of 15 to 18% because of this. If we talk about Reliance Jio, that contributes around 28% of the SOTP valuation for Reliance Industries, and on back of this news, we saw Reliance Industries was buzzing today. Even if we talk about brokerages, what they believe for Reliance Industries is that now that the tariff hike has happened, we will closely need to monitor the consumer downgrade if there are any, and any subscriber churn if we see in Reliance Jio. Apart from that, Jefferies has also went ahead and hiked the target price for Reliance Industries to 3,580 rupees, because what they believe is that the initiative to raise tariffs ahead of the peers reflects the rising focus on monetization. Apart from that, let's also watch out for Bharti Airtel as well, because this company has also taken tariff hikes in the range of 10 to 21%. Hike is actually somewhere lower than Reliance Jio, and if you look at postpaid tariff hike, that was somewhere in the range of 10 to 20%. But there is another thing which is happening in Bharti Airtel, is that we have seen bulk trade happening. So around 18 lakh shares have been traded already, and the value of this trade is going to be somewhere around 280 crore rupees. So definitely watching out on this counter also, because if you look at the stock price, Bharti Airtel is down 1.25% as we speak.
Thanks for taking us through that. So all of these stocks are in focus today on the back of that telecom auction of the spectrum, as well as the price hikes being taken. But let's move on. Let's keep it going with the technicals. And Aamar, I'm going to come to you for Reliance Industries. You've also picked out one stock that Gaurav has spoken about. And when I look at the last 6 months, almost 21% higher. But surprisingly, this last trading week, the last 5 days, the stock has seen some stellar moves, 8% higher in the last few days as well itself. So what is the momentum looking like on the technical front to you? Are you penciling in more upside anytime soon?
Look at Reliance. Reliance earlier also had made a all-time high of around 3,030 odd or so, and from those levels, the stock was in for some consolidation. But what we've seen is that taking that level out yesterday clearly means that there is a lot of scope and steam left in Reliance, because that was a major level, and also as the news was also triggered in with regard to the tariff hikes in the telecom. So that also bodes well for the organization. And technically, if you ask me, on the long-term charts, on the intermediate term trend, even the short-term trend, that continues to remain strong and positive. And what we've seen on the charts is that the average daily traded quantity in terms of delivery quantity, in terms of volumes, that also has increased. So somewhere that's a positive thing. And also if you look at the derivative data, we are seeing a lot of put writing happening. So that again is bullish for the market. And as far as the July series is concerned, we are again seeing some sort of I would say build up happening there as well. So it's a good stock to hold on to if someone is not long. Buying at the current levels, I wouldn't recommend, but yes, those who are long, they can definitely hold on to, because Reliance could rally towards 3,300 levels.
It's about Reliance Industries, but Janelle, let's put the spotlight on the insurance sector. Star Health, why is this one in focus today?
Yes, so the company had analyst meet yesterday, and there are some takeaways from the company. Let's look at it. So company has reiterated its strategy towards sourcing of profitable growth, and they're also aspiring to attain market share leadership across all of the distribution channels. Now talking about FY 2025, they're expecting the industry to grow at a rate of about 15 to 17%, and they're expecting to and they're aspiring to grow at 1.1 to 1.2 times of the industry rate. Now, the company also expects to increase their combined ratio over 100 basis points for FY 2025. And if you look at company's plan over 3 years, then by FY 2028, the company expects to double its gross premium written to about 30,000 crores and expand their market share to 35% in retail health and deliver a net profit of about 2,500 crores. And if you look at the stock price, the stock is buzzing up over 4%.
So that's Star Health for you. That's seeing an uptick of about 4.5% or so. But let's talk about Suraj Estate Developers, which is a real estate company, and that particular counter is in focus because they've come out with a clarification, and they're saying that they may announce in future about a probable sale of a property to a corporate entity valued at about 90 crore rupees. However, they're saying that the deal is still at a non-binding MOU stage. Apart from that, what they're saying, they're expecting to settle a long pending case at the city civil court between a cooperative housing society and the company, and the said society is standing on one of the properties owned by the company at Dadar West in Mumbai. So on back of that, You have Suraj Estates that is in focus primarily on the fact that they are looking to announce a probable sale of a property to a corporate entity. So we'll wait and watch out for that particular announcement. For now, the stock is trading higher by about 2.9%.
All right, lots to watch out for when it comes to Suraj Estates in the days going ahead. But Amar, coming back to you for a technical check, Dr. Reddy's on your radar today. 25% in the last 6 months, in the last 1 year. So what's the move looking ahead? What are you penciling in on the charts?
So see, if you look at the pharma space, we are seeing some positive traction there. And Dr. Reddy's, overall, if you see, the stock was in for consolidation between 6,200 on the upside and 5,800 on the downside. But that level has been taken out, 6,200 has been taken out. And also, if you go back and see, so somewhere or the other, the next level where Dr. Reddy's could meet with some sort of resistance is its first week of May high, that's close to 6,400 level. So that's a level where the stock could meet with some sort of resistance. If that is taken out, then the stock is headed towards 6,500 levels. Technically, if you see, there is a strong momentum building on the intermediate term trend, and also what we saw yesterday was the volumes and delivery quality both have been on a higher side. So that clearly spells positive for the stock. So this is one stock one can keep a close watch on.
All right, so that is about Dr. Reddy's. But Gaurav, Tega Industries, why is this particular stock in news today?
Well, Tega Industries is in focus, and the reason being that Tega McNally Mineral, which is a wholly owned subsidiary of the company, has entered into a contract as a consortium member with India's largest iron ore producer, who is NMDC, for designing, engineering, manufacturing and commissioning a new 7 MTPA iron ore screening plant in Ballari, Karnataka. And this is on the turnkey basis. If you look at the plant's more information, Kalpataru project is one of the consortium leader, and the contract is to be executed in the 26 months. If we talk about the total value of this contract, this is going to be somewhere in the tune of 870 crore rupees, while the share of Tega Industries is going to be somewhere around 120 crore rupees. Now coming to the stock price, if you look at the stock performance, it has gone up almost by 2.5%. So definitely watching out on this counter as how it performs in coming days.
Alright, good uptick coming in on Tega Industries. But viewers, on that note, we step into a very short breather on this edition of Market Fatafat. More news, more stocks to talk about when we return. See you, stay tuned.
If you like this video, then like, share and subscribe to ET Now.